There is no need to introduce Warren Buffett. The Oracle of Omaha has constantly emphasized the value of owning companies with solid, long-lasting competitive advantages that can produce steady income and profits over the years. Berkshire Hathaway, owned by Warren Buffett, is renowned for not paying dividends to its investors since 1967. Welcome back, everyone. In today's video, we will discuss why Warren Buffett loves dividend stocks. But first, don't forget to subscribe to EM3 Financial Freedom YouTube channel for more personal finance and investing videos. Fortunately, Berkshire Hathaway continues to prosper and generates billions of dollars in dividend income from its investment holdings. Despite Berkshire Hathaway not doing so, more than half of the stocks in the holding company's roughly $300 billion equity portfolio pay dividends. And for the Oracle of Omaha, the finest Warren Buffett dividend stocks generate a sizable income. The best dividend stocks, like Berkshire Hathaway, may provide investors with exceptional total returns over the long term. In contrast to the S&P 500 index's total return of 12.6% over the past 10 years, BRKB has produced a total return of 13.1%. Furthermore, BRKB's total return during the past 3 months, marked by strong market volatility, is 10.8%, or roughly 11% higher than the whole market. BNSF has paid substantial dividends to Berkshire, $41.8 billion. The railroad pays us, however, only what remains after it both fulfills the needs of its business and maintains a cash balance of about $2 billion, Buffett wrote in a letter to his shareholders. This conservative policy allows BNSF to borrow at low rates, independent of any guarantee of its debt by Berkshire. Since founding his first company in 1956, Warren Buffett has developed as an investor. Almost independent of the stock market's cap at the time, Warren Buffett could seek the biggest market inefficiencies because his portfolio was significantly smaller. He worked very hard to locate stocks with low valuations. Buffett said he would be happy to invest up to 40% of his net worth in a single security if the possibilities were assessed to be greatly in his favor, reducing risk. He was not frightened to have a single holding make up more than 25% of his portfolio. Apple accounts for over 40% of Warren Buffett's remaining concentrated holdings at Berkshire Hathaway. A concentrated portfolio is based on the premise that there are usually only a small number of top-notch companies and investment possibilities available, and having too many investments dilutes the impact of your few finest ideas. It's significant to note that Warren Buffett has always emphasized the idea of operating inside one's area of expertise. Risk, according to Buffett, comes from not knowing what you're doing. In other words, avoid investing in businesses or sectors that are too complex to comprehend. The majority of investment opportunities, in actuality, are outside the scope of our expertise and ought to be disregarded. Buffett's strategy has changed since his first partnership, focusing more on acquiring fantastic companies at fair rates than rummaging through the clearance rack for cheap equities. He seeks out businesses with wide-open doors for expansion and solid economic moats. Warren Buffett stated that his preferred holding period is forever when investing. The goal is to invest in top-notch businesses with promising long-term growth potential and allow their value to grow over time. For instance, Berkshire Hathaway's total investments should generate a $6 billion dividend payout between July and July 2023. The next three equities, which together account for nearly $1.5 billion of that sum, serve as an excellent illustration of how making investments in dependable, time-tested companies can give investors a solid foundation in a highly volatile environment. Chevron, CVX. Chevron is one of the most well-known energy firms in the world. This year, it made a record-breaking profit as gas prices skyrocketed in the spring and summer, similar to most gas providers. In the first quarter of 2022, Warren Buffett increased Berkshire Hathaway's stake in Chevron by 2.4 million shares, betting on the company's success. According to Berkshire's most recent financial disclosures, it currently owns 161.4 million Chevron shares, representing a $25 billion investment and an 8.4% ownership in the business. The second largest shareholder in Chevron at this time is Berkshire Hathaway. Chevron pays $5.68 in dividends per share year, which means Berkshire Hathaway will get $929 million in dividends from Chevron alone. And if current oil and gas trends continue, that sum will only increase. For 33 years in a row, Chevron has boosted its yearly shareholder dividends. A 3.5% dividend yield is now being offered. Not only has Berkshire Hathaway raised its investments in Chevron this year, but in other energy firms as well. For instance, the Federal Energy Regulatory Commission granted Berkshire Hathaway's bid to purchase up to 50% of Occidental Petroleum in August. Take a look at your energy bill to see why Buffett has decided to invest his whole portfolio in non-renewable energy firms. Though we can't be sure, Buffett is betting that gas businesses will continue to post phenomenal revenue growth for the ensuing quarters or years of enduring global instability. Kraft Heinz, KHC. The third largest food corporation in the United States and the fifth largest in the world, Kraft Heinz, is the owner of well-known grocery store brands like Ore-Ida, Capri Sun, and Lunchables. 2015 saw the merger of Kraft and Heinz, which Berkshire Hathaway mostly oversaw. The path to Kraft Heinz' success could have been smoother. However, the most recent 13F filing from Berkshire Hathaway, published in mid-August 2022, indicates that the business presently owns around a $12 billion investment in Kraft Heinz. Berkshire Hathaway owns more than 26% of Kraft Heinz with 325.6 million shares. Berkshire Hathaway anticipates receiving about $521 million in dividends this year, given that Kraft Heinz pays $1.60 yearly dividends per share. By the way, Berkshire Hathaway paid Kraft Heinz exactly that amount in 2019, 2020, and 2021, so even if the business bought Kraft for too much, the consistent dividends help make up the difference. Currently, the dividend yield is 4.3%. Bank of New York Mellon, BK. The Bank of New York Mellon Corporation, also known as BNY Mellon, is a New York-based holding company for investment banking services and asset management. The Bank of New York, 1869, and the Mellon Financial Corporation, two of the nation's oldest and most prestigious financial institutions, merged to become the current business. In 2007, the two organizations united, and a decade and a half later, it was obvious that the combination was successful. BNY Mellon was one of the largest asset managers in the world as of 2022, managing $2.2 trillion. Berkshire Hathaway is one of BNY Mellon's biggest shareholders, holding 9.2% of the firm. Berkshire Hathaway has 74.3 million shares, worth over $3 billion, according to its 13F filing. Additionally, Berkshire Hathaway will get $110 million over the following year due to BNY Mellon's annual dividend of $1.48 per share. Approximately 3.3% is the current dividend yield. The COVID-19 pandemic did not affect Berkshire Hathaway's ownership of numerous significant banks. But since then, the business has removed several financial organizations from its portfolio, most notably Wells Fargo, where Berkshire Hathaway has held a position for the past 30 years. Buffett's continued investment in BNY Mellon clearly indicates the company's stability and reliable payouts. It pays to have a dependable cash flow stream during difficult times, which is exactly what Buffett has done with these three investments. And indeed, most of us need Berkshire Hathaway's enormous cash reserves or broad investment holdings. Nevertheless, following Buffett's example and investing in a select group of dependable, stable, dividend-paying companies is a wise financial decision. Always consider your investment objectives and risk appetite while making decisions. That is all for this video. We will be back soon with another informative video. Don't forget to like and share this video. Until next time.